Live. You're going to have to bear with me because I am new to this part. Let me get my notes up so I know what the heck I'm saying. So, you guys, the only thing that is certain about the housing market in 2023 is that it's uncertain. Who knows what's going to happen this year? Today, we're going to talk about whether or not institutional investors are buying up all our housing inventory, whether or not the Fed's ever going to stop raising the interest rate, and if we've potentially finally stumbled on a path to addressing our homeless crisis. So stay tuned with me for this month's market update so that you can navigate the 2023 housing market like a boss. By the way, I'm Heather Mathias with eXp Realty here in Spokane, Washington. So we're going to start out today talking about how things look on a national level, and then we're going to catch up on our local news and market conditions. Let me move this so I can see if there's anybody. Okay. All right. So first up, one of the topics that's been hot in the housing news that I follow is speculation on the impact that institutional investors are having on the housing market. Institutional investors or iBuyers are large, usually multi-million-dollar corporations that buy homes and they either fix and resell these homes or they hold on to them as rentals. Now, I'm going to link to a CNBC article in the description below, but I did want to quote the first sentence of the article. It says that institutional investors may control 40% of the US single-family rental homes by 2030, according to MetLife Investment Management. Okay, that's a scary prospect, the idea that institutional investors would control 40% of the single-family home rental market. But how realistic is that? Let's get into the facts. Oh, I'm also going to link to an excellent rebuttal article from The Atlantic, which just kind of connects us back to the fact that naming a villain that we all love to hate, Wall Street, doesn't change the fact that we're not building enough houses. So let's not get misdirected here by politicians and the media. Let's stay on point with the fact that we really need to build more houses. Okay, so let's look at the facts. Institutional investors currently own about 5% of the single-family rental home market. And they started purchasing these single-family homes years ago in 2010 with incentives offered by the federal government to deal with that glut of vacant homes we had back after the 2008 housing market crash. Now, investors go where the opportunities are. And the fact that we've collectively mismanaged our housing inventory and supply for decades has created this opportunity that the investors are responding to. I mean, if you think about it, like how many stocks see the kind of growth that the housing market has seen over the past few years? Not many. How can you blame them, you know? Okay, now another issue with these institutional investors is what do you do when an institutional investor owns a lot of property and they are not very nice landlords? Maybe they don't repair stuff like they need to. Maybe they, are negligent. Maybe they're discriminatory, whatever. There are real problems with landlords in general that do need to be dealt with. One of the issues is our code enforcement is underfunded generally, almost everywhere. We don't give our cities the resources they need to deal with negligent landlords. Are they bad landlords though? I mean, the only statistic I could really find is that institutional landlords tend to be more quick to evict than everybody else. But that's probably just they run their apartments and houses like a business, and staying on top of your paperwork and getting your notices out appropriately. That's just part of having a streamlined, well-run business. And my guess is that a lot of mom and pop landlords are less streamlined and they're not evicting, not just because they're nicer, but because they're not as efficient. So I want to quote this. I want to quote the article from The Atlantic because it was so good. He says, the political project of building enough affordable housing and enacting necessary tenant protections, it's a hard one. So he's encouraging us, he says, don't let make-believe villains distract you from the real solutions to the housing crisis. We have to build. But then getting to the bottom of why we don't just freaking go ahead and build more houses, it turns out is actually a little bit harder than I thought it would be. So it is an issue. I hope to do a video about this month. So if you haven't had a chance yet, hit the subscribe button or give me a follow and stay tuned. Oh, and when I wrote this a couple days ago, I was going to talk about how the Fed was likely going to increase the interest rates. But then I realized, but then with this Silicon Valley Bank and Signature Bank crisis happening, who the heck knows what the Fed is going to do? They are really in between a rock and a hard place. They've got 6% inflation still that they're trying to get down to 2%, which the raising the interest rates theoretically would push down. But now we have a potential banking crisis, which we should maybe lower the interest rates to help with the banking crisis. So it is a real pickle, and we just kind of have to stay tuned and see what happens. All right, now let's take a look at our local housing market inventory, if I can figure out how to do it. Share my screen. There we go. Okay, so our local housing market is, quite stagnant. We just are, with the combination of high interest rates and low inventory, we've got low supply and artificially suppressed demand. So it's tough to sell a house these days, guys. You can see that our median home price here at $377,000 is down about almost 7% from February of last year, but then pretty consistent from our median home price in January. Oh, and I did want to state, this is just for single family homes. I don't include condos in my stats because I feel like we don't sell enough condos to include them. And this really gives you an apple to apples house comparison. We've closed 270 houses in February, which is very low for us. It's down a little bit over January, and it's down quite a bit from February of last year. And this is going to be related to the fact that, less people are putting homes on the market, probably because they don't want to say goodbye to their 3.5% interest rate. Hey, homeowners, that reminds me, let me know in the comments below, how many of you are choosing not to move right now, even though you want to, because you don't want to say goodbye to your low interest rate? Let me know. Now, the active inventory and median days on market, so these are both down, which is a good sign, a good indication that buyer activity is returning. So a lot of this inventory that we've had sitting there, not moving, looks like it's starting to move. We just got to see what happens with the interest rate, guys. If it keeps going up, we're going to keep losing buyers, and it's just going to get tougher to sell a house. Our month's supply of inventory is about the same. It's down a little bit from the month before, way up over what we had at the same time last year. And that just means how much housing do we have available to purchase? And our new listings are way down. And my guess on this one is that this is going to be based on, what am I trying to say? Oh, this is going to be based on the interest rates as well. You can't move to your new place because you don't want to say goodbye to the interest rate you have at your old place. All right, so let's go back. Done with that. All right, so the last things I want to talk to you about are some of our local housing news. There's actually been a lot of interesting things happening in the housing market locally here in the last few weeks. The first is a rental reform bill that passed at the Spokane City Council. Now, this rental reform bill is going to charge every tenant that's not on low-income subsidized housing $15 a year, generating an estimated $645,000. So this big fund that they're going to create is going to be used to assist tenants who are living in uninhabitable living conditions because of a negligent landlord. So it's going to provide them assistance to get out of that bad situation, as well as legal assistance to go after that landlord for restitution. The other side of that coin is this fund is also going to provide for landlords who've rented to high-risk tenants and who have damages that exceed the security deposit. So if your security deposit was $700 and your tenant did $7,000 worth of damage, you can go to the city to get help with that damage that needs to be restored. The bill is going to allow for 3 new housing inspectors as well as 1 housing navigator to help mediate issues between renters and landlords. Now, of course, the landlords don't like this bill because they don't want regulation or any other fees. But I actually think it's a win-win. We need to have some movement to make sure we have a path to deal with bad landlords, to just make it safe for tenants. These rent increases have been killing people, and to have bad landlords on top of that is just an issue that needs to be addressed. So I think this is a great move by the city of Spokane. The other ordinance that passed is the Pavement to the People ordinance. Now, this one is very cleverly named, and it's intended to incentivize housing development downtown. So underutilized areas like parking lots are going to see sales and use tax waived and that's going to encourage housing to be built in those areas. According to the city, parking lots account for 30% of the land downtown, and at peak usage are only about half full. So we really do have some land that we can repurpose and reutilize to make some space for more housing. So I think this is great. I'm excited to see if these incentives really help. And then that would have been all the news that's fit to print, except for yesterday at the City of Spokane Council, at the City of Spokane's, Spokane City's Council meeting. I don't know how to say it, but you know who I'm talking about, the City Council. They passed an emergency ordinance that is drastically increasing the fees on new construction. So when a new home is built, builders pay various fees to help offset the impact on our infrastructure, to help offset the impact that new construction has on our infrastructure. So there's 2 fees that are generally assessed. One is called a transportation impact fee, and this is a fee that can only be used in that area, like in the area where the fee is paid, and it's intended to go towards roads, the impact on our roads. And the other one is called the general facilities fee, and this is the fee that gets charged when builders or a property owner, when they first connect to city sewer and water services. Guys, the city has not updated these fees in 20 years. Why? I don't know. So despite steady population growth over those 20 years, we now have an emergency we need to deal with so we can invest the needed money into our roads and water and sewer systems. And listen, I get it. Yeah, if we need to invest the money, we need to. But calling it an emergency is kind of a stretch. And they didn't give anybody any notice that they were getting ready to do this. It just popped up on the agenda, giving builders and realtors and all those vested people really not a lot of time to respond. And the amount of increase is insane. 2,600% on some of these fees. There's no way it's going to last. They did agree to, even though the emergency ordinance has passed, they did agree to, my phone's ringing, hold on. They did agree to, what was I talking about? My phone rang and it distracted me. Okay, so they did agree to revisit this at their next meeting on the 27th, and there is an alternative proposal that's like, hey, let's go ahead and raise them to current, using the consumer price index. We're up 66%, I think, from when they last determined these fees. So let's raise them up to match modern times, but not 2,000%. That's too much. We really have to balance the need to invest in our infrastructure with the need to continue to build. We don't want to hinder building. We need to increase building. and we need to invest in our infrastructure. So surely there has to be a plan for how we deal with that. And the last thing I wanted to tell you guys about is there's a very cool update to dealing with our Spokane homelessness issue. I'm going to link to all of these articles in my descriptions below. But I had a really enjoyable time reading about the journey of Inlander opinion writers Gavin Cooley and Rick Romero. So in July of last year, they put out an article in the Inlander talking about their trip to Houston to kind of gather some information about how to deal with the homelessness crisis here in Spokane. So Houston is the fourth largest city in America. They have managed to reduce their homelessness by 63% since 2011, which is very significant for a city of that size. And they've done it largely without relying on big tax increases. So the trip was exploratory to like kind of figure out what's working there that we can bring back home and implement here in a way that makes sense for our local market and circumstances. And to make a very long, entertaining story short, it has led to these retired opinion writers forming a volunteer organization. It's called the Spokane Regional Homeless Authority, which is going to help bring together all of these different systems and groups and city groups, nonprofits that all serve the local homeless population. Coordinated efforts like this can help reduce redundancies, speed up grant writing processes, and you just get like economies of scale when everybody is sort of collaborating and working together. Now, of course, it's never easy to get any of this done. The proposed participants in this regional homeless authority were the city of Spokane, Spokane County, and the city of Spokane Valley. And the city of Spokane Valley immediately said, no, thank you. We'd prefer to do our own thing. So there's lots to read about if that's something that you're interested in. I do think we actually are on the right track. Like collaboration and coordination is a great way to deal with problems that are really beyond the scope of a city government. So that's all the news I have for you today. Thanks so much for watching, and let me know in the comments below what you think of the current housing market. Talk to you soon.